Gentlemen, thank you very much for joining us here. Mr. Kotak, as I said, let's address some of the near-term issues, some of the short-term issues before we go into the medium and the long-term. I want to start by asking you about what you make as far as the interest rate trajectory is concerned. The MPC yesterday delivering a 35 basis point hike along expected lines, but the commentary also taken in by the market seems to suggest that the RBI is very firmly committed to bringing down inflation at this point in time and bring it within that MPC band as far as the inflation range is concerned. Do you expect another rate hike in February, or do you believe that if it is a rate hike in February, that will be done for now?
So, Shireen, I think the governor has spoken yesterday, and he has said that he will be data dependent. Therefore, we've got to take him at his word. And my sense is we've got to wait and watch for what happens to the Fed in December. I think that's going to be a very crucial signal about what is the interest rate trajectory in the largest market and the largest pool of money in the world, which is the US. At the same time, I think we need to watch the Indian situation. The target for RBI is 4%. And if you read the press interview where Michael Patra spoke, he said that we want to be within the band first, yes, and then towards the target. Therefore, based on that, my sense is there could be one more rate hike, and that may be the time for thinking about a pivot. But we got to watch very closely the data, and maybe around 6.5 as it looks today, subject to what happens to the world, subject to what happens to oil, subject to what happens to many, many other things. And based on that, I would say that at this stage, maybe 6.5 is where there could be a time to pivot.
I think it was at a CII event, or at least an industry body event, but the last time the finance minister once again asked Indian industry to go out there and invest and gave the Hanuman analogy. What are you waiting for? Why don't you recognize your own strength and the opportunity? Has that message now resonated deeply with industry? Are we likely to see any movement on that front?
No, not only the message. Let's give credit to the government for a continuous and consistent investment from their side in public infrastructure. That is really what has helped us over the last few years. Private sector, we are starting to see investments in the last few quarters, whether it's in real estate, construction, logistics, chemicals, some of those sectors. But there are many other sectors where there is still excess capacity. Eventually, private capital does have to earn a particular return to justify that investment in capital. And that's where I think it's more a short to medium term window that we're looking at for private capital to come back.
Sanjeev Puri, let me address the question both in terms of demand as well as private capex. As we just heard there from Sanjeev Bajaj, some impact continues, at least as far as the consumption side is concerned, when we talk about rural economy. And that has been the story for the FMCG industry as well. What are the trends that you're picking up? We're almost at the end or the last lap of 2022. What is the outlook for 2023?
The macros for investments, I think, are pretty good. If you look at, the availability of funds, the corporate income tax, better balance sheet, so all these are positives. Earnings also are on a better trajectory. The issue really comes to is about capacity utilization, which is also picking up, but there is a serious amount of global uncertainty, and there are serious headwinds on exports, so that's going to dampen sentiment. But I can tell you that for companies like ours, which are very domestically focused, I think that private capex is continuing. We've already done, and some more is in the pipeline. So for domestic oriented, I think it's an ongoing process and it's happening.
Okay. Mr. Kalyani, let me address both the domestic market as well as the global environment with you, because you have a pulse on both, especially in light of the government's move to, at least as far as the defense manufacturing is concerned, to indigenize much more. You've got the third list that's now already out, and the uncertainty as far as the global environment is concerned. How is that likely to shape things over the next 12 to 18 months?
Well, I think the challenges in the global environment, which all of us know, the war in Europe, the challenges of the China plus one strategy that many countries are facing and trying to figure out, and the challenges of creating a resilient supply chain. You go to any place, anywhere in the world, you will hear this word, resilient supply chain. What is a resilient supply chain? I think in the manufacturing world, this creates huge opportunities for India, including in defense, by the way. But there are pockets of opportunities where things are happening at a much faster pace. I'll give you the example of railways. The railways are undergoing some tremendous modernization. Just day before yesterday or yesterday, a tender was out for 1,600 locomotives of 9,000 horsepower. Siemens was the lowest bidder, 20,000 crores. It is all supposed to be produced in India in an Indian plant. In one more week, there's a similar tender out for 9,000 horsepower locomotives, which is going to come out, and then 200 Vande Bharat trains, and then 100 high-speed trains. Now, this is the kind of initiative that Mr. Vaishnav has taken in his ministry to create industrialization of the railway manufacturing system, which was somehow embedded in the last century for many, many years. And overnight, this is going to get completely modernized. What took Europe and America 50 years to do, India will do in 10 years. And this is going to create a huge manufacturing ecosystem, especially in the area of electrical equipment, because these are all electric. We have, as a policy, Indian Railways have moved from diesel to electric, as you know. The same thing is happening in defense. There is a whole slew of policy changes that have taken place in the last 3, 4, 5 years. Everything is focused on Make in India, and more than Make in India, focused on what the Honorable Prime Minister calls Atmanirbhar Bharat. And his definition of Atmanirbhar Bharat is very clear. Atmanirbhar Bharat means something that you produce with your own intellectual property. You want, if you got a technology collaboration from some company, no matter which part of the world they come from, and you want to export that product into, not into a conflict zone area, but even in a non-conflict zone area, you won't get permission to do it. But if it is your own product, where you own the technology, you will get it. If the Defense Ministry starts doing what the railways are doing in terms of creating this large industrialization capabilities, then I think India will have a game-changing situation in manufacturing for the domestic market also. Because when you do, whether you do railways, whether you do defense, whether you do automobile, it's not just that industry that you're dealing with. You're creating a whole host of new technologies which have usages in many, many other areas. And that creates an ecosystem, that creates skill sets, that creates capability. So I'm very confident that that sector is going to do well.
Both railways and defense. You held up the railways as an example of things moving very fast. Defense, not fast enough?
Not fast enough yet.
Not fast enough yet. John Major Sinha, let me address the issue of the India story and the strength of the India story. Practically every interview that I've done in the last few weeks, whether it is with the domestic CEO and more importantly with the global CEO, everyone's talking about how this is going to be either India's decade, if not India's century. I don't want to go down the century road, but let's talk about the decade that we are dealing with at this point in time. What do you believe are the areas where we have enough momentum to push us forward, and where do you believe work needs to be done?
So if you just look at the world, Shireen, if you take five blocks, the US is about 22 trillion, Europe is about 17 trillion, China is about 16.5, 17 trillion, Japan is 5 trillion, and UK is 3 trillion. Look at each of these countries. The US has a very, very complex situation, that it has inflation which is higher than India. I don't remember in my living memory when this has ever happened. And the Fed is driving up interest rates to bring about a recession. I mean, the decided goal is to bring a recession. Europe will slip into a recession in a month or two, with very high energy prices and with a complex situation that it's importing inflation because of oil prices, and not the US situation, which is at $5 trillion of stimulus. Then you come to China. which is decided that, you know, it's had enough of a run, and only thing that Xi Jinping wants to do is consolidate power. And so I hope he continues to consolidate power and create opportunities for India, because they are really have self-inflicted a goal which they are trying to unwind, and they're going to have a very hard time unwinding. Japan, the yen has gone down to 140. It's still not raised interest rates. So it's in a complex situation, and it's aging very rapidly. And UK changes its prime minister every 10 days. So, you know, if you really look at that context, India is a beacon of stability, which has a fiscal balance which is coming about. We have some headwinds and we have some tailwinds. But overall, everybody who looks has to say, if you have a country, which we will be the largest country in the world in terms of population, we have started to grow. We have started to have a market size, you know, what I call the Indonesia of India. So if you take 50 million Europeans, 400 million Indonesians at $10,000, that in itself is very attractive for the world. And then we have, yes, oil prices going up, but if there is going to be a recession, the oil prices will moderate. Interest rates, you know, we will have a little bit of a tough time with that. But if you look at the MSCI index, it has taken us from 7 to 14.5%, and China has been brought down from 36 to 29%. This means serious amounts of dollars are going to be coming towards India. What do we do with it? That's the question. We have some constraints which are there, which have to be addressed. But how do we take advantage of our many trends that are there is going to be what it will be on us. So if we don't take this decade, the only people we should say shame on is us.